Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, hope you're doing well. We're going to look at the major 5 names here, and then ITHUF, TCNNF, which had earnings come out. So the market was pretty much held together by duct tape at the end of last week due to a couple tweets that caused the algos and bots to do some buying in the S&P 500. That fell apart today. The tech sector down over 3%. Continued weakness, and the more days we see like this, the greater the odds are that we're heading down towards October lows. And financial or tech sector names like Facebook, like Netflix, they've already broken their October lows. So we are looking at the lows of October in everybody, the markets and the Canadian MJ sector included. We saw at the end of the week. So again, we cannot give the bulls any benefit of the doubt when the bears have momentum. The bulls have to prove strength to us. They did not prove any strength at the end of last week. The bounce was very lethargic, no follow through. And here today we have a clear bear signal with a bear break of 34.58. Anybody that entered bearish on 34.58 had a very significant day today with follow through to the downside. So support now is 32.08 and 31.82 as the next levels. And on any bounce on the hourly time frame, we're looking for a lower high to form. This is a potential hourly bear flag at this point. Bulls are going to have to come out swinging and break $33 first thing tomorrow morning to try and negate the possibility of this hourly bear flag. If we come out tomorrow and can't break 33 and we fade down and break 32.22, things are going to get ugly in the short term, as that will confirm the hourly bear flag and we'll be headed down to the lowest prices we've seen in the last couple months. Looking at the weekly longer term perspective, after 31.82, there's no support nearby. 31 and 30 psychological are the next levels. How low can we go? As low as SPY takes us. It does not matter. Fundamentals do not matter. Market cap does not matter in the short term when you're looking at a week or two window when fear starts to take over. And if fear strikes this market, we're going to be looking at Canadian MJ taking a significant hit. So we're going to see a lot of people saying, I never thought we'd see these prices again if October lows are broken on the S&P 500. And we're going to be watching for, again, bulls at this point have to do a lot of work to shift momentum. Any bounce on the daily time frame for CGC, we're just looking for a lower high. It's been 8 days now of lower highs in a row. So if we break that pattern and see any kind of bounce, we're just going to look for another lower high, as the last one was 46.74. So the short-term outlook absolutely favors the bears. We have supports being tested, and the bears have a lot of favor unless we can get some kind of significant shift with bull volume holding these support levels. Cron is holding up as the strongest of the major names in the Canadian MJ sector, but that does not mean it's not going to be susceptible to market weakness. The range right now is 752 key support and resistance is 908. Why is it the strongest? Well, look at the October low, 650. We are currently way above that support level, over 20%. So significant, we're 30% above that level. So bulls are just fine on Cron, all things considered, but it's a weak hourly bounce attempt. Just like everybody else, key resistance is 832 and 836. Support is down at 802. So in this scenario, we're going to be watching for the potential if the bulls do show up in the S&P 500 and if Canadian MJ bounce can get any follow through. We have a nice tight pattern for Cron on the daily time frame to be watching, whereas everybody else is close to breaking key support to head down towards the October lows. So TLRY, also the same pattern in terms of, well, not the same pattern, I won't say that, but we have a range of watching support, $99, and resistance of 113.85. The bulls held that support at the low of today, and if we look on the 4-hour time frame, we do have a tightening range. So at this point, the higher low would be 102.27. The bounce at the end of the day, a little bit more significant than most of the other individual names. If we see a bear break tomorrow of 102.27, it's a red flag short term for the bulls, and the bulls have to break 113.85 to shift this momentum back in their favor. Short term action, because of that end of the day bull move, we're going to put TLRY and Cron as the two stronger names. CGC not quite as strong. There was opportunity to trade CGC bullish today. We grinded along support, ended up with a little bull break at the end of the day. Not a huge upside, but there ended up being a couple percent. So grinding that support, it's going to be a key level heading into tomorrow, whether that was accumulation and that support level can hold, or whether we're going to drop down to lower lows. ACB is already at the lows of last week, 792, and the low of today is 798. If we break 792, we're looking down to 725. Anything on the daily under 893 is just a lower high. Haven't seen 2 green days in a row in a couple weeks, and on the verge of breaking the support, just like CGC potentially is as well. So ACB and CGC are more in line with each other. The difference is if we break that low of 792, we have space before we get to the next support of 725, whereas CGC doesn't have that luxury. That next support level is going to be right there that CGC is going to be testing. So for that reason, I'd put ACB in front of even CGC because we're not close to those October dump lows like CGC is. APHA, obviously, lead bear continues. We've been seeing this for quite some time now, the last 4 or 5 days. Clear bear break of 1226 and 1237. Just another leg down, and the next support on the weekly time frame is nowhere nearby, 1060. So RSI levels can get extreme until we try and find some support. Resistance is 1211 and 1245. Anything under those levels are just hourly lower highs. And again, very clear lead bear with a new daily resistance of 1375. So the market and the correlations to the market are going to dictate how significant the weakness that we see in the Canadian MJ sector is. Canadian MJ is a high-risk sector right now. We have the legalization, but we don't know how these companies are going to perform. There's issues with potentially the shipment and Canada going on strike with the postal workers. We have people complaining about government oversight. So again, it's a high-risk sector, and what that means is money, when there's fear in the market, money goes to sure things. They go to utilities, they go to consumer staples, they go to things that people are going to have to buy no matter what. And MJ could potentially be a discretionary good that people buy less of if the market weakens and we enter a bear market overall. And again, it's just the fact that, semiconductors, we had the semiconductor sector in the market run crazy amounts, hundreds of % in the past couple of years, fueled by cryptocurrency, by these companies that make the mining equipment, seeing, again, just complete FOMO. And the names that ran the hardest and have the least amount of stability, they're getting absolutely crushed right now. And just an example as the sector leader, NVDA, look at the weekly time frame where the run-up we had in 2017 and 2018 was just a moonshot. And look at the collapse from almost $300, pretty much a 50% drop in less than 2 months, or just about 2 months. So my point is, the more strong and steady sectors that have been around and are proven and issued dividends, perhaps, if there are EITs, that's where money is going. High risk, like semiconductors, like Canadian MJ, that's not where money's going to be going in this weakness. So it's all about SPY is the bottom line. And the tech sector is not proving anything to us. Again, check out the SPY videos every day that I put out. But SPY is close to breaking the low, and you can see how correlated. I mean, I pointed this out the last video, but let's just compare the correlation of CGC with SPY on this daily time frame. And spoiler alert, it's going to be significantly correlated. I mean, it's pretty much the same thing. So these charts have been linked up tick for tick ever since early October, and that's going to remain the case for the time being. So ITHUF stands out because of the close at the high of the day, very bullish in an extremely bearish environment. We had the low, high of the bounce, higher low has been set, and we're looking for a lower high now in the low $5 range, perhaps $5.20, $5.30 to be looking for that lower high. But it's a nice equilibrium forming, and we'll see if we get that lower high and tightening range into next week. TCNNF, bearish reaction to earnings, but it too is staying in its tightening range. We opened right at resistance and rejected, and it was profit taking all day. Must hold support is 1020 in the short term, or it will be a clear bear break of this pattern. We had acreage start its consolidation. It might be down, I haven't looked, but maybe 15% from the high of today earlier, at least 10%. So that's that scenario with a lack of support established. We pull back very hard, very quickly. PYX did have that bull break first thing this morning. We saw a very nice follow through. We saw the break at 1532. We ran up over 16 live during trading this morning. I was talking about locking in profit when we were over 16 because trying to sell into weakness, into the bid, you're going to lose a % or two as opposed to selling on the ask into strength when we had that bull momentum. And of course, seeing that Canadian MJ was falling apart first thing this morning, breaking its support levels means be extra cautious on any MJ name as a result to that. So overall, the bottom line is the sector doesn't look good. There's no way to sugarcoat it at this point. The overall market doesn't look good. The tech sector does not look good. So the bears have favor. We cannot give the bulls any benefit of the doubt until they start to prove things by changing trends. 15-minute trend has to change. Hourly trend has to change. 4-hour trend has to change. And then we need to see volume behind these moves for these bulls. So if SPY breaks the low of October, we're going to be looking at a lot of fear in this market, in my opinion. So we'll see how it plays out. One day at a time is all we can do, and just remain protective. Again, hedging positions, whether it's betting against the market overall, lightening up your long-term MJ positions. We were talking about that at the lower high on these weekly time frames, and now they're certainly playing out very significantly, and we're close to another leg down. So we'll check back in tomorrow. Bears, congrats. I mean, some nice clear bear signals. That's another way to hedge, obviously. Just play the exact opposite of any long-term positions that you do have. And you can have a long-term CGC position and still enter a bearish day trade on the bear break of this daily inside bar. The multiple daily inside bars breaking. So hope you're well. Hope you continue to do some good things out there. And I forget what I put here at the end of this video. Maybe a sunset video from Key West. And I'll see you all tomorrow.